Hi, everyone. Thanks so much for joining us today. My name is Jason Whitehead, and you're with the next episode of The Jasons Take On, where we're going to be discussing the financial side of customer success. Just a couple of things to kick us off here. We do target about 45 minutes for this conversation, including some time for Q&A. So hopefully we'll be able to have some of your questions answered for this. And also wanted to let you know that we're doing things a little bit different this time, that we're asking any questions that you would like to have asked or discussed during this episode. Please go ahead and type them into the discussion panel in the LinkedIn group for the Jasons Take On. We're going to try and capture questions there, and you can enter them throughout the webinar. And if we don't have time to answer them all live during the session, we'll be sure to answer them in the LinkedIn group. And we encourage everyone, even between episodes, to please go ahead and use the LinkedIn group to keep the discussion going. Because while we enjoy sharing our thoughts, we also would love to know what you guys are thinking and hearing what are your perspectives as well, too. Also, I wanted to let you know we do have subscribing for subscribers only, some additional content that will go out periodically between episodes. So if you haven't joined our mailing list, we encourage you to do so. And also, we're excited to let you know about our new website, TheJasonsTakeOn.com. Has just gone live. So you can get there to see the replays, register for upcoming episodes, and find out about some other resources as well, too. So if you get a chance, please check it out. And finally, we want to let you know about two great training services that are coming up pretty soon. The first, the Jasons will soon be launching our own specialized training around various customer success topics that we've covered in our webinar series, and those will be launching relatively soon, so keep an eye out for that. And also, Tritons is launching the Customer Success Mastermind training with Success Track Enterprise, which is based in Europe, and this is an exciting subscription-based training program that really is designed for early career customer success professionals, as well as current leaders and aspiring leaders in customer success. So more information will be coming out about that pretty quickly, but we hope you'll check out Customer Success Mastermind when that's made available. So thank you so much for joining us today. We look forward to having you here. And also you'll notice on our website too, that if you'd like to have some individual coaching or training sessions with either of the Jasons, you can learn more about those on our new website and contact us there as well too. So to jump right in though, just a quick introduction for those who don't know me. My name is Jason Whitehead. I am the CEO of Tritons. Tritons is a customer success and user adoption training consulting company based in Washington, D.C. Been working in this space for over 20 years now and work with a variety of small, medium, and large companies to help them accelerate their customer success or internal software adoption programs. And I'm really excited to be collaborating on this topic with my co-host, Jason Noble, who I'll turn it over to Jason so he can do his introduction.
Hey guys, good morning, good afternoon, and good evening if you're on the other side of the world as well. I'm Jason Noble, based over here in London in the UK, the other half of the Jasons. I've been around in kind of the technology space for 25 years now, working a variety of different customer-facing roles, but really helping organizations, both big and small, build, create their customer success functions and deliver value and growth to their customers. And most recently, working with a number of startup organizations in London, based up in the city, helping them kickstart their customer success functions and teams there. So a really, really exciting time. Like Jason, I've worked with a variety of different organizations throughout my career, both big and small, different stages of maturity, and really seen customer success come from its infancy, where it was called other things, to where we are today. And I'm super excited to be here on episode 6 of our webinar. We're going to, as we've done with the other sessions, there is a what we call a Be Bold question that we want to pose to you guys, and we'd love your feedback in the LinkedIn group. And the Be Bold question for this session is, how can you demonstrate return on investment to your organization and use this to increase alignment and support for your customer success initiatives and programs? So have a think. We'll post the question in LinkedIn, but we really would like your thoughts for that Be Bold question. So how are you going to demonstrate ROI for your execs, your team, for more investment in your customer success function? What we've done the last few sessions as well, we will, as we close off the webinar, we'll give you 3 specific takeaways for things that we've talked about through the session, so you've got some kind of call to actions based on what we've said. That said, we're going to jump straight in, and I'm going to throw the first question back to you, Jason, a very big question for you. Why are we talking about this? Why is the financial side of customer success so important, and why now?
Well, I do love this question, and it's really, I think, growing in prominence and importance to the financial aspects of it every day. In fact, I just came back earlier this month from speaking at the SuccessCon in Boston, which is all devoted around the financial side of customer success. So it's such an important topic and one that there's a lot of energy around. And I think, there's a few reasons for this. And, one of the big things here is that we're already finding a lot of customer success programs are struggling, and some of them are not getting the funding and resources that they want. Some are being cut entirely by their executives, or they really struggle to get the alignment that they need with the other departments, and therefore are unable to deliver on their mission as well as they would like. And what we're finding here is a lot of times, a lot of the other executives, CEOs and CFOs in particular, but also heads of sales and other departments, they don't fully understand customer success, and they don't understand and appreciate the impact it has onto the financial health and growth of their organization. So helping organizations really understand the financial impacts is so critical here. And I think it's important to start to get people around the mindset. And one of the lines that I really enjoy is helping executives to understand that your customer outcomes determine your vendor incomes. And if you want to have a growing subscription-based SaaS company or other company that sells on a subscription basis, you've absolutely got to make sure those customer outcomes deliver what they want so that you will get the growth and financial return that you want. So I think it's very important to do that. And I think linking to financials and demonstrating the value of your customer success program is really what starts to get you the internal executive support and the resources that you need and the headcount that you need to grow and deliver. So it's really important that people understand why this is, what's the impact it's having. We're also seeing, and this came up a lot at the conference, is that investors now are really looking at customer success as a growth engine. And I think it's important that we start to think about it the same way. Many times when I'm talking with customer success professionals, they're so excited about the profession and about the impact of customers, or they're so down in the weeds of the day-to-day customer issues that they seem to forget that, hey, this is all about the financial growth of my employer, my company as well too, and that's why we're doing it here. And sort of along those themes, we're already seeing where some venture capitalists are requiring that the heads of customer success and VPs, that they have experience managing professional services team, and that they're used to the idea of utilization and profitability of a professional services group. And this really indicates that customer success is starting to be viewed as the idea that you may eventually be charging for it, but it is a professional service, and it is something that will be a growth engine for your company. In fact, I know Oracle, they did a presentation at the conference where they were talking how they are now charging for customer success and really launching this as a fee-for-service professional service that they expect their clients to pay for. And that's really changed the way that the internal organization has viewed customer success. And I think it's also important that as we're going through, is that there's a lot of time, and Jason, you brought this up on several occasions, that you can overserve a customer, and you get to the point that the cost to serve your customer, to deliver your customer success service, is no longer profitable for your organization. I think it's really important to make sure that you're delivering your customer success services to your customers, but doing it in a way that makes sense for everyone. And also that, this really is about long-term growth and not just ARR or MRR. And you've got to make sure that you're really paying attention to the impact that you're having in the financials there. And then finally, one of the reasons that I think that's important for people to recognize this right now is, at the moment, we're in really good economic times, and organizations are hiring like crazy, and it's hard to find enough qualified customer success professionals. But do remember that business cycles always come up, and at some point there's going to be another downturn. And when that happens, you want to have already positioned your customer success organization to be viewed internally as a growth driver, as a financial necessity, so that people really understand how important it is. And if your CEO and CFO don't understand this and don't understand the impact that customer success has, they're less likely to keep supporting it when things get tough. So now's the time to set yourself up for future long-term success in your organization. So those are some of the reasons that I'm excited about the topic and think it's so important. But Jason, let me turn this over to you and sort of move this forward. Can you tell us what funding models are you seeing around customer success teams and some of the financial implications of that?
I think you've made some really, really key points there. And that idea that you've got to get that better alignment with your CEO and CFO is fundamentally what we're trying to do. And it's shifting that mindset. The funding models or types of models we're looking at for CS and how you can get investment really, I think, are all geared around what level of investment do we as CS leaders, CS professionals need in our teams, in our processes and systems and tools to really grow a profitable, impactful customer success program that drives the business objectives we're working with in the vision. And what does that level of investment bring? So what do I need to do to get X more CSMs at different levels? What do I need to do to get an investment in tools and technology? And that's really, really important. So it is about that engagement and that relationship you've got with your CEO and CFO, so you can demonstrate to them how this investment is impacting the business and the profitability of the business, and the ROI. And really what they want to see is evidence as to how what you've done so far is working. And if you're only just building a CS team, that can be quite challenging. But really it's that evidence that can help you justify the need that you're putting in for those models. There are two models that I think we see quite often in the market, and then they're really becoming more common and common. The first one is a revenue model that really is simply predicting revenue growth based on a certain number of additional CS resources. So you can tie that model down to a CSM level for each new CSM at a different size. It can be junior, senior, mid-level. There's an expected revenue growth that comes in from them, an increment in revenue. That one I think is one of the most common ones. The other model that we see that ultimately for me it still relates back to revenue is related to customer numbers. So I hear very often that different organizations have CSMs or even account managers in some organizations that look after X, Y, and Z number of customers. But ultimately that does tie back to segmentation. In a lot of customers organizations, when you start customer success, is geared around the financial side of it and revenue, so it does tie back to revenue. So they're the two models I've seen good success with, and really to help you build the foundations for a really solid success team, and then also to drive the growth with it. I think what you've got to do to build out those models is really start by determining what it is that your CS team are doing, what are the activities that they're working through on a day-to-day, a week-to-week basis. And more importantly, what customers are we spending time on, and what's the value that we're driving for those different customers? You mentioned it earlier on in your kickoff session, Jason, about the over-servicing thing. I think it's something that we do see time and time again, particularly in early stage organizations, early stage customer success functions. Customer success is reactive. We do the same thing for every customer, and we just say yes a lot. And it's that changing that mindset to do the right thing for the right customer and not over service everybody. It's really thinking about the commercial side of customer success. We're not here to over service all the time, and it's really important. I think that the best way to try and understand the kind of dimensions as to how much time you're spending on activities and time with different customers is to start with a simple time tracking exercise. And I've seen great success with this by just doing it over a very short period with all the team or a key subset of the customer success team. Just do time tracking over a couple of weeks just to get a good base level as to how is their time split. I'm not an advocate for doing time tracking for your CS team all the time. It isn't yet a professional services function where we're looking at billable time, utilization time. That this is something we'll talk about later on. But as a starting point, I think it gives you a really good gauge, and you can build from that initial analysis standard models that you can then build into this. For this customer in this segment, these are the activities that we need to spend to drive this value, and this is how much time a CSM can spend doing this. And you can start building out a model as to a number of CSMs can drive these activities. And I've seen really good success with that. The challenge you've always got when you look at customer success time is how much time is spent between the cost of acquisition, so either helping out the sales team on new opportunities or helping identify and close upsell, cross-sell and renewal opportunities, so the cost of acquisition, and also the cost to serve. So are there escalations, training that is there as part of the ongoing service for the customer that are more aligned to the operational side of the business? I've seen in a number of different organizations when I've gone through the time tracking exercise that inevitably what you find is that 50-50 is very typical for the split. And as I say, I've seen that in multiple organizations, but doing that time analysis really helps you build that foundations to understand what it is. I think what you want to try and understand what CSMs are having the most impact on financials. So I want to look at who my high performers are, and what are they doing, what activities and tasks are they doing that are driving that high performance, and then look at how do I replicate that. So build that into your model, find those activities that are performing really well, and also those activities that don't drive value, and build your model around highlighting those ones that drive value and losing less of the ones that don't drive the value. I think one thing that's really, really important in customer success, particularly in early stage businesses, early stage organizations, having room and time to build in innovation and almost experimentation. I've seen great success in a number of organizations over the last couple of years where I've created an amount of time on a weekly basis for my customer success managers to think about what I call customer projects. Now, they might be specific activities and projects that are driving a new way of thinking, a new line of business, new value for specific customers, or a more generic one. But it's having that mindset where there is some innovation time. I think that's so important when you're really there to drive what does really good look like for our customer success function. And I think you've got to look at the different segments you're doing as well. You can find, as we've talked about before, that too much tech touch can hurt your revenue and profitability. It might not work for all customers. We've talked before about the idea of tech-enabled approach and tech-enabled journey, where you can bring in the human element through a CSM at the right point of your customer journey. So I think it's really important to have a look at that and the impact on revenues and profitability. Based on that kind of guideline there, Jason, what are your thoughts about how do we measure ROI? Because it is, we can start those conversations with our execs, our CFO and CEO, but how do we measure the return on investment that our customer success teams are driving? And what examples have you seen working over the last couple of years?
Yeah, this is always such a popular question that comes up, and I think a hard one to answer for a lot of organizations. And I think, sort of looking at it from a couple of ways is helpful. And one is, before you even think about that, start to look at what sort of baseline you have now, and being able to track, what was the financial situation before we started doing customer success services and working with customers, and what's been the impact after, and also at any key milestones along the way. So if we've started to resegment our customers, we brought on additional team members, or we started adding new services that we might do, or we've expanded our tech touch. Having some way to track baseline and afterwards is really important. And I think in some organizations, I hear all the time, we don't have an automation tool like a Gainsight or a Tango or any of those. What can we do without this? I'm like, start small and start with whatever metrics you can easily gather. And some of them you may need to calculate manually, and you probably need to talk to your financial folks to see how you can track some of those impacts. But use Excel if you need to, and get started quickly with an eye towards what you want to build towards down the road. So I think that's pretty important. And just even a simple analysis with pivot tables and give you some insights can be very, very helpful. Also looking at what are some sort of cohort analysis that you can look at, in terms of different things. So every customer that's starting the same time period, like in this month of January, February, March, or even what are some ones that you might look at differently in terms of our high touch customers or low touch. But looking at it from different lenses is very important. But I think it's important to look at, as well as sort of what I find helpful is thinking of in terms of hard dollars and soft dollars. And what are the things that you can directly assign a justifiable proven dollar value to? So, are there reductions in churns that you can point to before and after and assign a dollar value to those? So what's the revenue you've protected as a result of your activities? Similarly, if you look at any sort of specific time that you've spent to reduce getting a renewal signed. So customers were so happy with this, they may have signed a renewal early, or they may have done a 2 or 3 year renewal and extended this beyond. How quickly did that happen? How much did we streamline the process? Because they saw the value and it was a no-brainer for them. Also, looking at what's the time it takes to expand your accounts, and what's the dollar value of those account expansions. So we've been able to bring in more revenue, we've been able to do it faster than if we were not here, and we've got the before and after numbers to show what this is like. And I think that those are the kind of things that coming up with hard dollars that you can prove to your executives, here's why you need us and here's why it's so important. And I think you can also look at looking at some of the soft dollars that are out there as well too. And by this, I mean, what are some things that you're clearly impacting, but you may not be able to directly measure the financials, but are definitely positively affecting the bottom line and are trying to help grow the organization that you can point to as a success that the executives and CFOs will say, yeah, that's important. A couple of things that you might look at there. What are the number of referrals that you receive from customers and the dollar values of those referrals, whether they are won and lost, and sort of tracking that out? What are the number of client references that you've been given by satisfied customers? And what's the related business won from those, and the dollar value of those won deals based on the referral, based on their experience working with you? What's also the length of time for customer renewals and how long the customer has been there and sort of the impact on the lifetime value of the customer. So put a dollar value amount to that. Before we have this, the average customer lifetime value in the segment was X. Now, as a result of our work together, it's 3X or 5X or whatever it may be, being able to show the impact you've had on the long-term growth and stability of income. I think you could also look at some things like increase in number of features that maybe that are positively linked to specific features, especially ones that people often talk about stickiness. And Jason, I know you don't enjoy the term sticky because gravity is the physicist in you, or attraction. I forgot exactly your term, but what is the likelihood to renew based on the amount of increase in adoption that we've been able to get them of a certain feature set that we know correlates well towards moving forward, as well as also increasing adoption of end users. And I think there's also some other steps that you can go beyond that. So, for example, if your application is an e-commerce tool or has a clear financial impact to your customers, being able to show that as a result of increased usage of our system, our customers generated an extra 10x in sales, or $1 million in sales, or $5 million in sales, some sort of quantifiable customer financial benefit that you can then take and say to sales, here's a selling point that you can use, or to marketing, here's another point that you can highlight of why we should win more deals because this is the outcome our customers have received. And I think things like that, of really trying to say, okay, how do we identify specific numbers that we can get to, hard numbers, and then what are some of those soft numbers that we can point to that are successes that have helped grow our organization as a result of our work, and here's how we can prove it. So I think those are pretty great. But Jason, I think we had a couple of other points here. Maybe you can share some of those ideas.
I think there's probably two more that I'd cover. I think you kind of covered the ground base there, which is really good. But the other two really depend on kind of the models that you're using internally. I think one, if you're looking at charging for customer success services and almost kind of professional services that you can drive through your customer success team, and it might be training, it might be on-site consultancy, you can look at some of the more traditional professional services measures there. So you can look at utilization rates for your customer success team, which I think is a really good thing to do. And so basically what percentage of the time is billable or revenue generating. That goes back to the early point around time tracking. You need to be able to do that, but it's an easy one to do if you can do it. And then also is the revenue generated exceeding the cost per head count? So are people bringing in more billable revenue than their cost? And have we got an allocated amount of time that we're expecting for each CSM to be doing billable work? So have a think about it more as a professional service one. And you can apply kind of a market rate, an hourly rate for that, like consulting companies do, and kind of come back with what the expected revenue would be. So there's that one idea. The other one is around the tech touch and tech enabled touch. I think that goes on from what you said earlier on. How do we measure the before and after of putting in these processes and journeys there? So if we've got no tech touch journey or tech enabled journey, what does customer success look like? But then also when we start introducing those, what ROI and additional value do we see those generating for our customers and for our business? And can we measure the impact of it? And again, you've got to kind of look at what time frame. So that's probably a harder one to do, because I think you've got to agree, look, this is what today looks like. We haven't got the tech touch journey in. This is the value we're generating. Put in the tech touch journey over a certain time frame. Give yourself probably a couple of months to measure a good return on it, and then say this is the result of putting in that tech journey there. So they're the two other ones I'd add in there, Jason.
Yeah, I think those are such great ideas, and by separating out the value of the tech touch versus the hands-on high touch, I think it will really give you some insights into where you should prioritize your investments first as you go to understand the greatest lift and what it needs to be. And Jason, I think that's a nice touch off for our next question, which is, should customer success own a revenue number or a target?
I think there's a lot of emotion around this. I shared a post on LinkedIn. Please do take a look. It's one that I've shared from someone else, but it talks about the fear that a lot of customer success professionals have about revenue and owning revenue. So there is a lot of emotion around it, and so it's a topic for hot debate right now. I think, yes, they should own a revenue number. I said earlier on, for me, it isn't just about customer success. It's about commercial customer success. And that commercial side of it ties back to a financial benefit we're finding in the business and for our customers. If you look at there's probably three key wins for our customers that make them successful. One is increased revenue, one is decreased costs, and one is decreased time that they're spending on certain activities, and all of those are associated with dollar value. So I think it's really important to have a revenue number. But I think that the key thing is, though, it isn't sales. Customer success isn't sales, and I don't want to see success have effectively sales quotas that historically account managers or sales teams have had. And I also don't like it when you see customer success have individual commissions. I've seen this in a number of organizations, again, early stage when they're more reactive, and going through that, how do we support the sales organization? The CSMs were commissioned. For me, it reinforces the wrong behavior. It reinforces a sales type behavior and an individual behavior. What I want in customer success is us to be thinking about the whole customer base and driving long-term relationships for all of our customers. And by putting in more team-based incentives, not commission-based, not individual ones where people are being more competitive with each other, I think it really reinforces the better behavior there for the team-based behavior. I think you've got to look at the kind of targets for us for revenue. This should be more around generating value through customers through that revenue growth, not just about winning certain revenue. What I don't want my success team to do is be seen as salespeople upselling for the sake of upselling to meet targets. I want them to be able to provide more value to a customer by introducing the customer to new features and services. It is a different way of thinking about it, and a lot of it comes by working with your customer success leader team, your training, to really have that mindset that you're not there to drive sales. You do hear kind of the flip side. A lot of people talk about introducing sales and revenue targets for customer success breaks that so-called trusted relationship that we as customer success professionals have with our customers. But I don't think it does. For me, it can reinforce that relationship when you do it right. I want the customer to know that I'm there to help them achieve their desired outcomes, drive value for them, drive growth for them. And if by introducing new services and value for them, I can achieve those objectives, then it isn't me selling things to them. And I think it really changes the way you do it. So I don't think it does damage the relationship. I think you've got to be very, very wary about how you're positioning the message. It's not about I'm trying to sell you something. There shouldn't be random calls where you're selling. It should be a journey where that value is just naturally coming up. So I think it's it is a topic where there's a lot of debate on. Please have a look. I'll share in the group that link as well to the article. That's a really good one. It brings me to another question that again has a lot of emotion attached to it. And you've mentioned it slightly earlier on, Jason. I've seen a lot of debate on some different customer success events and forums. Should customer success be chargeable to customers?
Yeah, this one is all over the map. And I think, there's a couple of schools of thought. And my personal philosophy is that at the very basic level, probably not. I think that there's a certain expectation that as a vendor, you will help do a few things to make your customers successful and to make sure that they get on their way. But I do think as you move up the chain and as you look at different models and the higher touch pieces and understanding, sort of the history of customer success and why it came up, I think it is completely appropriate to charge for customer success. When I look at this and, remember, why did customer success even become a thing? Why did this even start? And the answer is because customers were not really good at getting value from technology on their own. And it wasn't specific to the software. They were really good at getting systems live. Where they struggled is after a system is live, getting people to adopt it and then getting measurable value from it. And when I talk to buyers of software, it's that way across their entire portfolio of applications. And some are easier than others. But basically, customers can't get value, so the vendors had to step in and help them provide expertise, resources, and services to help them address all the gaps that they've had internally for years as part of their implementation and adoption methodology. And this is a lot of work, and this is a professional service that when you think about it, the customer should be able to do it on their own. They should understand how to drive value and adoption within their own organization, but for whatever reason, they're unable to do so. So the vendor has to step in to do this as part of their mutual interest. So I think it's really important when you look at it that way and say, yes, there's a body of work that needs to happen and it requires skilled resources and expertise that should be chargeable. I think another thing too is when you look at external consultants, like, my company, Tritons, we provide consulting services for buyers of software as well as for customer success teams. And we go in and we've helped set up internal user adoption teams and programs. We've helped do ROI rescue projects where a customer has been live for 2 or 3 years and they're not getting the value. that's a professional service, and we charge for that. And our customers see the value, and they're very grateful for our help, and often renew and say, yes, this has just been a value-added activity. So I think it's important that people understand that, yes, you should charge for this time. But I do think also one thing that is nice about a software vendor is I do understand a lot of them are not looking to have their revenue come through professional services. They want to have the bulk of their revenue through license fees. And I think one of the things as a software vendor, you do have the option of saying, how do we embed some of these services and what we would charge for them into a license fee instead of just a line item service fee? And that's perfectly acceptable. It makes financial sense for your organization to do that. But if you go that route, and if you're, for whatever reason, your organization makes the decision to do that, I think it's very important that internally as a CS leader, you go to the executives and the CFO and get commitments that say, that's great how you want to present to the client, but internally, we need to have some revenue allocation to our department based on what would be the commercially available service that we've been charging for it. So if an external consulting company was going to provide the same service, what are the fees and revenues that they would charge their customer? Then let's internally allocate that to revenue generated by the customer success team. Because I think a lot of people do realize that if you were not blending in that service, they would be unable to charge those higher rates for their subscriptions and for their licenses and still be competitive with the other vendors out there in the market who provided additional services at the same rate. So I think that's really important to understand. And I think it's also, looking at different pricing tiers, whether you're giving someone a single name customer success manager to work on their account, or if someone has a larger book of business where they're not getting as much time, you clearly would want to charge differently for those. So yes, I think it should be chargeable, but you've got to give some thought to how you want to do that and what that needs to look like. And Jason, I think that's sort of a nice kickoff for a question for you, which is, should customer success own renewals and upsells and cross-sells?
I love these questions because they are so topical right now, and there's lots of discussions on them. I think my answer to this, should we, and I'm going to group them all together. I think they should, so it's a yes, but I think it depends on the size and structure of your organization. I think I'm categorically not a fan of the kind of more traditional approach where once a year we bring an account manager or an account exec in to action a renewal. I don't think that helps our customers. I think the success individuals, the success professionals in our organization have the relationship. I want them to be able to drive the whole value, and your renewal commercial conversation should be part of what we're doing. So I don't like someone else coming in that perhaps doesn't know as much about the customer. I think there are some organizations that have got built up resources internally where this is how they've worked, and there are ways that you can do it there. I think if you align very closely with your account execs, your account managers, and your CSMs, there are models like that where it works. I've seen smaller organizations where they just don't have the resources to have separate people that look after renewals and upsell, and it makes far more logical sense than in commercial sense to have it within your CS team. But as a fundamental answer, I think yes, they should own them, but it really looks at the kind of organization structure you've got there. We've talked about this before, and I love thinking about renewals as what I call a non-event, and ultimately the actual physical renewal should be a process that is a signature. And if I've got the process correctly done right, that physical signature is all that's needed for the renewal. If my customer's getting value from us, and we know where they are in the customer journey, we know what the risks are, and we know a certain number of days out from the renewal. If it's an annual renewal, 90 days out, we know the likelihood of them renewing, and we know what actions we need to take to mitigate any risks and any challenges to make that renewal more likely. That the CS team are absolutely best placed to action that renewal directly. And I think that the same applies absolutely to cross-sell and upsell. If they're part of my customer journey, I talked about it earlier on when you talked about kind of the revenue side of it. If we know where customers are in the journey, and that based on certain behavior, certain usage that they've had with a product or service from us, we know they get more value from being upsold another service, that then we'll build it in there. I like we've had one of the comments that's come in from one of the listeners is not talking about CS as selling, but as monetizing value, and I love that as a way of thinking, because it is. CS aren't there selling. We're there to drive more value for the customer. So it isn't selling. We're there to drive the value from this new service and function. So try and not think about it as sales functions, but getting more value from it. you've said before, Jason, I'll quote you on this. You've said, are you getting enough value from your relationship with our company? And if you had to renew today, would you? And I think that as a question to ask your customers throughout the journey is a really powerful one that really gets them constantly thinking about the value they receive from us. So assuming they say yes, if they say no, again, we can take mitigating action to prevent it. But if you think every single interaction with my customer, if you were to renew with us today, would you renew? It really changes that conversation with the customer, which is so important to do. So I think absolutely CS should own the renewals and upsells and cross sells. I think there are some differences that you might find in structure. If you've got resources that do it, maybe those resources move into the customer success team. And I've seen that in other organizations where you have maybe a separate renewals manager function or account managers that look after just the renewals, but they're part of your customer success team. I'm going to throw the next question based on that back to you, Jason. And again, it goes back to kind of the conversation you'd have with your internal stakeholders. How do you go about gaining support for an engagement with your stakeholders to invest in and build and grow your customer success team?
Yeah, I think this is another area where so many people have struggled. I've seen firsthand where we've been working with clients and they've said, oh, we absolutely have, complete buy-in from the executives and complete support. And, every time I hear the word buy-in, I get very concerned because, buy-in, it's kind of a dangerous term in the sense that it's not really, it's conceptual philosophy, as opposed to what I really want is I want to see actions and I want to see resources from my executive team and have them demonstrate their commitment to making this successful. And if people are unwilling to give me their time, priorities, resources, or whatever, then this is really not the biggest commitment that we have for them. So if you find yourself saying, yes, you've got buy-in, ask yourself the question, well, how do you know? And what observable actions and resources can you point to that demonstrate this? So, one of the things I think it's important is that to really get this commitment and get these resources and get these support, that comes back to the understanding the needs of the CEO and the CFO and the other executives, sometimes even the board, from their perspective. And what is it that in their mind is really their priorities, and what are the pressures that they're trying to balance? Because while as a head of CS, you're really focused on the customer, you're focused on your team, you're focused on outcomes, but the other executives, they're worried about staffing and HR and financials and product and lawsuits and investors and all kinds of other things that they don't have the time to focus on everything that's as important to you as a head of CS. So you need to understand really what's important from them. And I think part of this too is, trying to figure out, you can even do some research. So you can go and ask them and have some private one-on-one conversations to learn about their priorities, and then being able to say, well, here's how we can help with that, or here's how we're contributing to that you may not be aware of. Let's have that discussion. But you can also go and do some research on your own. So if you're a public company, look at your annual report or other financial disclosure documents to understand what are the executives communicating outward and expectations they're setting for the growth of the company and the financials. And how great would it be if in the future they're talking how much they're investing in customer success because it's so important for your organization? How do you set that as a goal to get to? And if they're not public, if they're investor decks that you have access to, or even Googling your own company or the industry to see what are the financial issues and growth issues and topics of concern, and then map in how you're positively contributing to those. And I think the more that you can figure out how you can solve their problems and make them look good and feel like you're taking work off their plate and making things positive, that's really going to go in your favor. But the other thing that I've seen a lot of people get tripped up as is they're not speaking the language of their audience. And so much of this is you've got to reach people where they are. So if your executive is constantly talking about numbers or other type things, make sure you're using words that fit in with where he or she is already thinking. And if they're talking one thing and you're talking about customer experience or NPS or other things that aren't as meaningful to them, try switching your language so that they'll pay more attention and fully understand it. And then show how you can explicitly demonstrate how CS is contributing to absolute dollars or revenue or profitability or even faster growth or growth rate. So get them to understand that. And when I was at the conference, one woman presented a case study that was really interesting, talking about how she was able to demonstrate internally that by adding, every time they added an extra customer success staff member, not just the absolute dollar value went up, but the rate of growth increased. And suddenly that became pretty clear. This is a proven growth driver. So when she went to get headcount approved, it went through very, very quickly when other departments didn't. So really trying to have some demonstrable numbers and impact that you can show there. So I think those are some easy things, but then you have to think about what's the process by which I engage executives. And one of the big mistakes I've seen many people make is they will jump right in and think it's just a one-off conversation or a couple of conversations, or we had a nice discussion about it and then we moved on, even though that was 6 months ago. And they didn't really go through and institutionalize that support and also spread it around for the entire organization to contribute to it. And let me tell you what I mean by that. I think it's important to start with individual discussions with your CEO and your CFO and even other key executives where you're going to want their support, and really help get some positive understanding and support for customer success beforehand, and demonstrate how you can meet their needs and be a critical driver. So if you've got a sales exec that you need to really win their support, have some private conversations, understand their concerns, and help them demonstrate how you can speed up sales and increase the dollar value of sales and make the sales life easier and have that impact. But then once you've started to get individual commitment or awareness, then you need to host some group alignment meetings at the executive level. And this could be, it's very rarely a one-off meeting, but actually getting them to map out and say, what is the opportunity here with customer success? What is the financial impact of this? What are the problems we're trying to solve that CS can solve? And really come up with a very clear, intentional problem statement that says, this is why we're investing in customer success. And not just the department, but as an initiative, as an organization, and why the entire organization needs to be aligned to do that. And then sort of work backwards from there and say, okay, so where are we today on this journey? And then let's map out all the steps that not just the CS department, but all the departments need to take to contribute to achieving the success, and possibly using a maturity model to get there. But I think it's really important as you're mapping this out that everyone has clear demonstrable actions they need to take with a very specific due date to commit to complete these, go forward. So if sales needs to, by next month, institute a policy where they're doing a warm introduction to customer success team within a week of closing the sale, great, is that in place? If we need to start doing other things to make sure there's alignment between the groups and handoffs are done, well, what are those specific actions? And sort of map in the customer experience over on this too. But the goal should be that everyone needs to come out of these meetings with a very clear set of understanding of why the organization is doing this and what are the actions that they or their department need to take to contribute to it, and not just have this be a customer success initiative. And by doing that, everyone's got a little bit of skin in the game, and you're starting the alignment process. And one thing I also have found very effective that not enough people do, but I really wish they would, is mapping out executive action plans, especially at the CEO, CFO level, but sometimes with the others. And it's interesting, we talk with folks and they're very hesitant to ask their executives to do anything to demonstrate their commitment and support, where when I talk with executives and CEOs, they're always like, hey, this is an important initiative. I'll do whatever I can to make it successful. I don't know what those actions are, and I'm really busy and have a lot of other things on my plate. So if you can tell me what you need me to do and by when, I'll go ahead and do it, but you gotta let me know what that should look like. So putting together action plans and every couple of weeks meeting with them to review the results and suggest the next action can be very, very powerful for signaling a commitment and setting the tone in your organization. So I think a lot more organizations really need to think through that whole process of how they do that and how they garnish that or gain that initial commitment and then keep it going year over year. And many times I also recommend bringing in an outsider to help facilitate that process. I know a lot of organizations use facilitators for their annual strategic planning retreats or other things to help get things going and to be devil's advocate and get everyone aligned. This is really an activity that if you are a CS leader, it's very hard to facilitate this group in this discussion while participating as well too. That highly recommend you bring in someone else to help with that process. So those are just some things that I've seen and have done a lot of work to help with that. But Jason, before we jump into Q&A, why don't you go ahead and sort of recap the 3 takeaways and the bold challenge question that we have, and then we'll answer any questions that we have.
Absolutely. I love that last point about kind of the kind of alignment meetings or realignment meetings. And I've seen great success in bringing in independent people, those facilitators, be it someone who knows your business, someone who knows the industry, or even customer success professionals, coaches. There's some great people that I know of in the industry that have done it really successfully. So I'm really huge advocate of that. Jason, great. What I'll do, the Be Bold question, just to recap that again, we will post this in the LinkedIn group, so please do take a look there. How can you demonstrate ROI to your organization for what you're doing with customer success and use that to increase alignment and engagement with your stakeholders and customers? So do have a think about that. We will post in a LinkedIn group, but we'd love people to comment on your feedback there. So please do that. The three key takeaways, there's 3 points here. One is, why is the commercial and revenue side of customer success so important, and what is the importance of it? And the takeaway there is that it is customer success, going back to fundamental principles, is related to customer growth and driving value and outcomes for our customers. And as we said, that ultimately would be either increasing revenue, reducing costs, or time savings that customers can use elsewhere. And they all have a commercial value to them. So that's the first one. The second one is, how do you demonstrate ROI for customer success? And you talked about 3 key ideas around this, Jason. You talked about the idea of, or as I'd say, how hard pound metrics. So reductions in churn, increases in revenue growth, and reductions in time to value for customers, as well as time to go live. What we called soft dollar metrics, so referrals and advocacy, for example, things like case studies and interviews, presentations from customers coming in and doing fireside chats, but also the idea of product and service adoption, not just usage, but adoption of features. And the last one we talked about there was the additional services. So look at things like utilization rates, billable time, and revenue that we can associate through gains in putting in the likes of Tech Touch and Tech Enabled Touch. And the last takeaway was, what are some of the key financial metrics that we can use to measure customer success? And I'll call out 5 here that we've used, we've talked about here, and we've both seen great success with. One is the gross revenue retention rate. And you talked about looking at cohorts there. So cohorts of when customers have joined, either on a time basis or geographical industry basis. And as a refresher, your gross revenue retention is your starting monthly recurring revenue minus downsell minus churn divided by your starting monthly recurring revenue. You can also look at your net revenue retention rate, again by cohort, which does exactly the same as what your gross one does, but you actually bring in the increases in revenue for expansion. Churn is another good metric to use, but 2 ways I'd look at churn. One is revenue level. You can either look at a kind of an annual contract value or annual recurring revenue or monthly recurring revenue there, but also look at the logos, customer numbers. That is equally important to do. Lifetime value for customers is a really good one to use as well. And again, do that by cohort. And the last metric that I'd always talk about using is that additional revenue generation from customers if you're looking at additional services that you're selling or additional product growth, and try to tie that down per CSM so you can look at high performing ones. So they're the 3 takeaways. What is the importance of the revenue side of customer success? How do you demonstrate ROI, and what are some of the metrics we'd use there? Before we close out, we have had one question in from one of the listeners, and we'll just go over that quickly. I'll pose the question back to you, Jason, to answer. So when you do the time study that we talked about, how do you measure CSMs who are driving the greatest value?
Yeah, I think there are a few different ways I've seen it done. And one of the easiest ones is if you are tracking either within some sort of automated tool the activities that are being performed by CSMs and relate them to the individual CSM and the account, you can quickly see what are the activities that CSM does and the dollar value of the account and the impact on revenue. So for example, if you excuse me, if you know that some customers, CSMs will call a customer 10 different times in the first 3 months, and we'll have calls around that and send them 10 different emails or 3 different things, then you can see sort of a volume-based, when we call them 3 different times, they were much more likely to churn at X point. But if we call them 10 times right up front, they stuck around and the lifetime value was increased 10x, that kind of thing. So I think you can do a lot of those activities. I have one client now where they actually have a standardized process where they're tracking different activity types related to the account, so that they're tracking to see what are the activities that have the biggest impact, and looking at those and looking at it over a certain period. So those are some ways you can do that. I've also seen where organizations will take and try and do that in a time tracking system. So the CSM might say, out of an 8-hour day, I spent 3 hours working hands-on doing these type of customer activities. And it may not link directly to a specific account, but you'll see where a customer success manager is spending their time. And then you can look at just the impact on their entire portfolio and say, okay, based on this customer success manager, has the greatest portfolio that's been renewed and has the greatest dollar value portfolio. Let's see where they spent their time. Let's look at a couple of other more high-performing people. So really tying it back to the outcomes of their entire suite of customers and then trying to figure out where they've allocated their time and what they're doing. And sort of related to that, you can start to look at things different ways. You may say it's not just the activities, but how many years of experience does this person have? How many years within our organization and their product expertise do they have? And what does that look like? And I think what you'll find and what I've often found at customers is people always have a sense of who are the folks that are just naturally good customer success managers, that are proactive, that are confident, that interact well with their clients, and who are the ones that just struggle for whatever reason. And maybe it's just not the right fit at that level, but you'll get a pretty good sense and some numbers to back it up to say, okay, these are the most productive people. Let's look at their traits and their activities and behaviors that will get us there. So that's how I've seen it done. Jason, do you have other thoughts on that?
Yeah, I really like that. And I think for me, as I said, I'm not an advocate of CSMs tracking all their time all the time, but I find it's a very useful exercise. And I think what you've got to try and do is tie it back to the customer journey, the outcomes, the expectations of the customer, and even ask the customers in some cases. So ask for that feedback. What elements of what I as a CSM or my team of CSMs are doing are driving the most value to you? And you have to look at kind of how do we represent that value? It is a return. So what dollar value are they getting from that investment they've made in us? What incremental increases? So I think you do have to spend quite a bit of time doing a bit more analytics into how you're driving the value, and kind of look at activity by activity. What do you see? What changes what the customers do? And you almost need to, I talked earlier on about the idea of innovating and experimenting. You almost need to try different things and see what works and what doesn't work. And don't be too worried about failing, right, and trying things that don't drive value. Yes, monitor it and manage it. But the whole idea is to let's find what drives the most value consistently, and how do I replicate that and roll that out to my other CSMs, and find out from your CSMs as well. Ask them what's driven the best proactive, meaningful conversations with customers where you've really seen the customers drive value from it. And you can look at look at the value of their account on renewal, right? Has that gone up? Have the services gone up? But look at the feedback you're getting from customers on surveys, and also as a result of your business review. So I'd add that as well, which I think is a really good one. What we will do though, guys, we'll put this question in the LinkedIn group, and we'll provide kind of our insights there. But we would love you guys to comment if there's any feedback you'd like to leave us. Please do there in the LinkedIn group.
Yeah, and I think Jason, just one last thought on that too. I think you've also hit on another thing, is not every CSM is able to spend all their time working hands-on with customers. So you may want to wait and adjust things. Oh, this customer spent a lot of time building out operations or resources that were then used by the entire team. Let's allocate them what percentage of their time spent working with customers hands-on. But I think, another way too is if you are tracking where they spend their time, understanding too, if they participated in the sales process before this customer was sold, does that help accelerate the time to first value later? And making sure you can do some analysis there of those customers, CSMs that were brought in early in the relationship, we're able to have more effective customers later. That can help build some for your alignment as well too. So a lot of different layers that you could take that, but the key there also is to get some data. And I think the other key is making sure that you're trying to figure out what are your best performers doing, what that looks like, but making sure you're not trying to use this as a punitive measure. If you have a performance issue, address that through other channels, and this may, be something. But I think to your point that this is a way to learn and grow what's effective and what you want to replicate. So being very focused on that.
I was just going to say the same thing there, and I think this isn't about performance management for our team, not at all. It's about trying to show what does good look like, and we want the team to be part of that. So really good point. So we are coming up for time, everybody. As we said, we like to target about 45 minutes. We've done about 55. We've really enjoyed the conversation. Our next one is on May the 21st, where Jess and I will be talking about customer success tools, technology, and platforms. So please do join us for that one. If there's any questions you'd like ahead of time, please do that. Put them in there, and any other questions, put them in the LinkedIn group. And please, if you've got value from this, if you've enjoyed it, we'd love your feedback. Please do share. And let us know. And do, as Jason said at the beginning, we've got a brand new website that we've just launched. So have a look at that. We'd love your feedback. So a big thank you from me, everybody. Jason, I'll let you say goodbye as well.
Yep. Thank you so much. Really appreciate it, and hope you can join us next time. Have a great day, everyone. Bye now.